My name is Jeffrey Davis. We are in the Money Matters Radio Network studios. Lots of things happening with the show. Before we have Gary introduce our next guest, even though I'll probably introduce him, I have a statement to make about Centerpoint Advisors. Centerpoint Advisors advisory services are offered through Centerpoint Advisors, LLC, a registered investment advisor with the Securities Exchange Commission. Securities are offered through National Securities Corporation, a member FINA SIPC. Accounts are carried by National Financial Services, LLC, member New York Stock Exchange, SIPC, a Fidelity Investments registered company. Centerpoint Advisors, LLC, a National Securities Corporation, and are not affiliated entities. All opinions of Richard Greene's are that of his own. Can we prove that, Richard?
Well, there's a little bit of basis for my opinions because that's what research is about. And
you give it to me to read, Richard. You know there's going to be a little adjunct to it.
And you're supposed to cite sources, so no, I don't pull these things out of thin air.
I know. So obviously, we're very lucky today. We have Richard Greene from Centerpoint Advisors, who is our investment reporter, one of our investment reporters, with Jennifer Wolfsberg. Richard, there's a lot going on right now in the marketplace.
Oh, really? Have you noticed?
You could do a whole show, am I right?
Since the election. Yeah, we've got, as they say, it's crunch time. It's the 11th hour, and the world, or certainly the investment world, are waiting with bated breath what's going to become of this, the congressional effort relative to taxation, the fiscal cliff, for spending cuts. So there's a lot at stake, and the one positive is there seems to be a consensus that there will be a compromise, but it does appear that the urgency, that our elected officials recognize the urgency to address this and really try to avoid it going right down to the wire. I've heard dates from December 21st to December 25th to Christmas as when they'd like to have a resolution. Because it's like freezing up the gears of commerce.
Sure.
You know, industry is very reluctant to make any commitments, and they're trying to do 2013 budgets and capital spending plans, and the uncertainty has created some headwinds. Yes,
sure.
Absolutely. But Jeff and Gary, good afternoon.
Good to see you.
Nice to be here again. This is a time of year that many people who have some discretionary dollars left look to share it. Make donations to their favorite philanthropies, be it a nonprofit, be it a religious organization. And I just wanted to touch base on that a little bit because there is also some discussion that based on certain incomes, some degree of charitable donations could be phased out based on income. So even though you say, well, if tax rates go up next year, isn't it better for me to defer making a contribution next year because my net after tax out of pocket will be slightly better? But you're playing a little bit of Russian roulette that they don't start phasing those things out. And before I get to talk about I'm actually here to talk about the Fidelity Charitable Gift Trust, which is our vehicle of choice for our clients, at least one that we recommend to people. We don't gain any commission or advisory business from it, but it's a very user-friendly, functional means in which to distribute your philanthropy to worthwhile organizations. But I'll just step back for a second. 98% of those people with a net worth of $1 million or more are philanthropic. Of all the philanthropy that is given in this country, 75% of it is by individuals. So we're a fairly philanthropic nation, and it's something we should be very proud about. The normal means in which people make gifts, there are several. There's not unlimited, although there are probably some interesting, tricky tax approaches to it. But for the average person, average philanthropist, you have several ways. You can start it with taking some cash out of your wallet and give it to the Boy Scouts or something like that, as there are people who come to the door to sell coupon cards in order to support a program. You could certainly write out a check, which is very, very common. What's very common is you can donate property stock certificates. And the strategy underlying that is that you try to donate appreciated stock certificates and of shares that, well, let's say, Gary, I know you bought a lot of Apple 5 years ago.
Right.
at $20, it's now $500. So if you bought 100 shares, your $2,000 became $55,000, and you could donate those shares, and any organization would be thrilled to to receive it, and you'd have an immediate deduction on a federal side of $55,000. But what if you have that appreciation and you want to be able to space that out? And yeah, you could do 10 shares, but you like the fact that Apple has appreciated very nicely. You sort of want to lock in the value of that, but you know that on average you donate $10,000 a year. So the Fidelity Charitable Gift Trust is a 501c3 registered organization that allows you to donate these appreciated securities, have them allow you to self-direct where your gifts and the amount of the gifts you want it to be. You can do this all online. It's very user-friendly, as I said. So you donate the shares. By virtue of them receiving it, most of the time there are some other alternatives, but they sell it. So now you have $55,000 in your charitable gift trust account. Year one, you donate your $10,000. Okay? That leaves you with $40,000, $45,000. They have 13 or so different investment options. So until you deplete that fund, you get to, it gets managed, and maybe it can appreciate to 60, from $45,000 to $50,000. So ultimately, it has nothing to do with your taxes or capital gains because you've already donated those shares. But you have very broad flexibility of the types of nonprofits and organizations you can donate it to, and you could have it sent out for specific purposes. You can have it sent out anonymously. You can have it sent out systematically to certain things. So the ease of doing it takes away, it eliminates a lot of the pressure of selling what's the best price. I have to give it today. I don't know if I want to give it all today. Sometimes you're just becoming acquainted with an organization and you want to see how effectively they use the money. So these accounts can be established for as low as $5,000 for an individual or $25,000 for a corporation. But they recently just established their biggest client relationship trust at $1.2 billion. Okay. The fund has about $7.5 billion. They've had 54,000 donor relationships in the 20 years. Fidelity was the first one to come to market with this. It has $7.5 billion in assets. It's about 2 to 3 times as large as the next two trusts, which are Fidelity and Charles Schwab. On an annual basis, there's about $1 billion that come into the funds and about $1 billion that get dispersed through donations. But you might ask, you can establish a private foundation, a charitable trust with $5 million. So why would somebody with $1 billion want to use Fidelity and perhaps pay some fees as associated with that, although at that level the fees are very minimal? It's anonymity. When you have a foundation, you have to file a 990 tax return, and the world gets to see exactly how much money you have. It has to be traced to some sort of, usually it's traced to an entity, and the world knows. Whereas you go to Fidelity Gift Trust, it can be established.
I really like this. I was wondering when you were going to drop the shoe. That is great.
Right.
What a benefit.
Yes.
Anybody who knows that's given donations knows that once you give a donation, it's almost like dropping a grain of bread at a picnic.
Right.
The first, for one ant, and all of a sudden 10,000 ants crawl out. If you give one donation, then every other nonprofit knows about you somehow,
right,
and they're all over you.
Right.
So it makes it really a lifestyle donation.
Right. But see, different things resonate with different people, in circumstances. Jeff, we have some more time because I want to...
Absolutely.
I want to highlight one fantastic element.
Can I just ask one question?
Yeah, sure.
When I sell that Apple stock,
yes,
there's a big gain. Do I have to pay the taxes on it, or does that get...
No.
So that's the thing.
No
when I
tax.
deposit it,
Not only do you not pay taxes, but you get the
the
deduction.
deduction.
Why don't we take a
It's
break,
irrevocable.
and we'll do a second segment, and we'll talk about this
Happy to.
after the break.
That's great.
Why don't we tell our listeners to listen in about how to do their tax donations without everybody jumping on them, with Richard Greene, and we'll be right back after these messages on Radio Entrepreneurs.